Hello from Trend Signal for our review of the data and events the week beginning the 27th of February. The last couple of days in February, we start the week with slightly weaker markets. The forest slipped overnight Monday morning. European markets were sort of on the front foot, partly because sterling was weaker. Sterling particularly weak on the back of talk of more Scottish independence angst, which is undermining sterling a bit. A headline here in Market Watch: Pound falls as worries over Scotland emerge again. That's the belief that the Scottish Parliament may call another independence referendum at the time of the triggering of Article 50. So interesting development there for sure. Markets are really pretty much in the doldrums, really, though, at the moment, in this rather odd period between the start of Trump's presidency and when Trump delivers on his promises. Market volatility fairly subdued, just waiting to see if Trump's actions measure up to his words. Volatility this time last year was a completely different order, with the markets just recovering from that sell-off in early January, early February last year. Volatility in the stock indices, currencies and commodities was considerably higher. But I think we are really just tracking Trump really as ever, unfortunately. The question is, how long will this persist? I guess it is until Trump acts. The markets will eventually grow impatient, as a number of organizations, media outlets have pointed out that valuations are very stretched on an historical basis, as we've discussed often in these workshops. And the position still exists. Profits have improved, so we may not be in a profits recession anymore, but valuations are still very rich. And markets remain strong, bizarrely. The Dow recording 10 straight positive days. So why the strong markets? Well, Trump says he's going to cut taxes, and this week we'll have a chance to hear from the horse's mouth as Trump prepares to deliver his address to both houses of Congress on Tuesday evening. This is recorded here on Forex Factory as Wednesday morning, but obviously that's 2 a.m. UK time. It's 9 p.m. Eastern time on Tuesday evening, and it'll be very interesting to see if he adds a substance to a lot of his rhetoric. It's an important address. A lot of presidents have made important announcements in this particular address, and it's very important that Trump lays out his sort of legislative program, of which there isn't much detail. He continues to act as if he's electioneering rather than running a government, and there's a certain amount of confusion in the way that he's delivered that so far. So he has a chance to amend that on Wednesday. Okay, apart from that, let's just look at the rest of the data. We got some important numbers coming out this week, starting off on Monday afternoon with the core durable goods orders. It's the core data that is important, one that excludes the more volatile food components. We're talking about an unchanged figure from the previous month of up plus 0.5%. We then have the third reading, I think, of the Q4 GDP data. A further improvement, as is with all agencies, including the Office of National Statistics here in the UK. When they're gathering the GDP data, they're often publishing the first round of numbers with only 40% of the data collected. So as more data is collected, the picture becomes clearer, and the US economy certainly is appearing stronger than it actually was. This is very much a lagging indicator. It's telling us what was happening in the past, so not particularly helpful, but useful to see how it has performed. Contrast that with the consumer confidence number from the Conference Board. This is very much a leading indicator, and we're looking at consumer confidence. It had declined actually from a 15-year high back in January, but the 111.8 number in January, we are talking about a small pullback to 111.1. The US consumer still very confident, waiting for Mr. Trump to cut their taxes, possibly. And then we jump to Wednesday morning, obviously after Trump has delivered his speech to Congress. We then come across the manufacturing PMIs. So the first one for the UK. Anything above 50 is positive. That's the manufacturing sector expanding. 55.7, very strong reading here in the UK still. The post-Brexit bounce inspired by a particularly weak sterling. And then we have the US's version of the manufacturing PMI from the Institute of Supply Management. Again, a very strong number, slightly stronger than the previous one, in fact. So that remains very positive. In fact, the manufacturing PMI now has been positive for the last 92 months, which is an extraordinary run. So anything above 50 remains positive. 3:30 in the afternoon on Wednesday, we have the crude oil inventories. Lots of shenanigans going on at the moment here with the crude oil inventories, with a big build-up in stocks not being accompanied by a sell-off in price. So there are some dark forces at play here. So whenever we get the figure, anything 20 minutes, half an hour after the number, even with a big stock build, the market seems to rally, which is contrary to what you would expect. Thursday, we have construction PMI, our construction sector continuing to improve from some fairly dire readings of the previous year. 52.1, still above 50, which is positive. And then we have on Friday, it's the services sector from the PMIs. First of all, with the UK, 54.2, slightly softer in line with the manufacturing PMI, but still very positive above 50. And the Institute of Supply Management, their non-manufacturing PMI, which we call services from the US, 56.6, again a positive number in the US. We end the week with a speech quite late in the evening by the chairperson of the Federal Reserve, Janet Yellen, at 6 p.m. Detail will tell us it's at the Executive Club of Chicago. Can be market moving. Hopefully none of us will be trading at 6 p.m. at night, but it can affect the markets for those of you that are. Thanks very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.